Hello and welcome to the Bitcoin Butlers podcast. I am Mike Watkins, and with me, as always, is my good friend and business partner, Matt Burke.
Hello.
And this week or so has been quite a wild ride for Bitcoin and the rest of the crypto market. In this episode, we will be covering the Luna UST Bitcoin situation, as well as some of the other news in the Bitcoin ecosystem. But first up is this crazy event, which is the Luna UST situation. And I think this is really confusing for a lot of people. And I know that I have to go through a fair amount of study to really get my head around it. So in order to understand this, the first thing you need to understand is what is a stable coin. So Matt, can you explain to our listeners what is a stable coin?
Sure. In general, a stable coin is a digital dollar. That's the easiest way to explain it. It's a way for you to store value that is not going to be fluctuating like other cryptocurrencies. So if you are putting money onto a cryptocurrency exchange with the intention of trading different tokens or buying and selling, Bitcoin, whatever it is, converting it into a stable coin allows you to keep your dollars digital. So you don't have to move money on and off from, fiat into crypto in order to be able to do those transactions. So it's just a way to keep money on the sidelines that is not going to go up or down in value, and to be able to enter into other assets quickly. And there's a number of different kinds of stable coins. The most secure ones are the fully reserved stable coins that are like Gemini Dollar or Tether, that for every token that exists, there is $1 in reserve that that backs that coin. So that if you are holding $1 worth of Gemini dollars, they've got $1 in the bank somewhere to back that up. So you don't really have to worry as much about the value changing. And those tend to stay at $1 really consistently. Next, you have cryptocurrency backed stable coins, which are tokens that are worth $1 that are backed by some other type of crypto asset. And the reserves that they have there are probably going to need to be a lot larger than a 1-to-1, because you have fluctuations in the value of the underlying reserve asset. And then lastly, algorithmic stable coins are what we had in the case of UST. And that is a coin that is really managed by kind of smart contracts and computer code that manage the circulation and the supply of that stable coin. And in the case of UST, you had its kind of partner token called Luna, which is part of this Terra network, that allowed you to move between Luna and UST at a dollar for dollar basis, meaning that you can always swap one UST token for $1 worth of Luna. So in theory, if the price of the UST were to go down, you could then have an arbitrage there where you could swap that out for Luna. It would actually destroy that stable coin, and that would keep the price theoretically at $1.
So to reiterate some of the things you said, a stable coin is basically I'm going to call it a digital coin that's always supposed to be worth $1 for the sake of this discussion. The price doesn't really go up. It doesn't really go down. It's supposed to be a dollar coin. It's just supposed to be a US dollar represented in some kind of form of cryptocurrency, right?
Yeah.
And these stable coins pay, depending on the coin, different interest rates. In the case of UST, they were on something called the Anchor protocol, and that paid a stunning 20% interest rate.
That's right. And that 20%, and this is pertinent to what happened is that 20% was almost like a teaser rate. They put it out there, and Anchor was part of the Terra ecosystem. And I believe that 70% of the UST that was in existence until sometime last week was deposited into Anchor, where they were paying yield of 20% APY for all of the UST that you deposited into that Anchor platform. And what they were doing is turning around and loaning that out to other people and paying interest on it, which, it was a teaser rate, but anytime someone's offering you 20% for basically just making a deposit at a bank, it does raise some questions immediately, at least in my mind. Why is any institution willing to pay you 20% for cash, essentially?
Right. Why is the bank paying you 0.5%? And if you convert your dollars to UST and put it in we'll call it the Anchor savings account instead of like a Bank of America, Wells Fargo savings account, you get 20% rather than 0.5%. And because of that, most of the people that were buying UST were staking it and trying to earn this 20%. But as you said, it was a teaser rate, and they passed a new proposal. I think it's called Proposal 20 back in March. And that said that rate wasn't going to stay there. That rate was going to go down. And subsequently, when that rate started to drop, people started pulling their money out of UST.
Yeah, so I'll pull up the slide that shows a little bit of this. And so the chart on the left here shows the top line is the deposits of UST and Anchor compared to the loans outstanding. And as you can see, over the course of the last several months, the deposits into Anchor, kept going up and up and up, and then just fell off the face of the earth. People just started pulling their money out of Anchor once they realized that interest rate was going to go down.
So there was another element we didn't discuss with this, which is that as part of this protocol, it was called the Luna. I think it's called the Luna Foundation Guard, LFG.
That's right, LFG.
They were going to buy about $10 billion worth of Bitcoin. I think at the time this happened, they had bought about 2.3 billion or so. And the idea behind it was that was also part of their reserves. But what ended up happening, well, I think we should take a step back and also talk about how this swapping works, because the Bitcoin plays a role there. So the idea was that if UST ever fell below $1, let's say UST fell to about 90 cents, then investors...
Well, let's say 98 cents, because that's what initially happened.
Sure. So if it falls below $1, let's say 98 cents, then investors are going to come in and they're going to buy a ton of UST at 98 cents, knowing that they can cash that in for $1 of Luna. So you're essentially buying you're buying something for 98 cents and knowing that you can immediately swap it for something worth $1. And even that small margin is enough to attract a significant number of investors. And it's also enough to attract very large investors who...
Well, that was the comment I was going to say is that in order for an arbitrage like that to be profitable, if you're talking about a 2-cent difference, it requires a pretty, substantial investment for it to be a meaningful return for anybody.
Exactly. And then the opposite was also true, which was that if for some reason UST was trading above $1, then you could swap $1 of Luna. Let's say UST was trading at $1.02. Mm-hmm. Then you could swap $1 of Luna for $1.02 of UST.
And make 2 cents.
And the idea is that these two forces working together, it's a bit of game theory here too. These two forces working together would help keep the value of UST right at about $1.
Right. And the And the one additional point that's also important is the burning of the token on the other side.
Correct.
So if you swap UST for Luna, that UST is destroyed
Correct.
and is out of circulation, and
Mhm.
vice versa. If you swap Luna for UST, then those Luna coins get destroyed.
Right. And that, to my understanding, is where Bitcoin, the Bitcoin reserves come in, which is that if this system doesn't quite work, where market forces are keeping that stable coin right at $1, then they have these reserves, and those reserves, 2.3 billion is a lot of money, would come in and purchase and rebalance wherever it needed to be rebalanced. So they have this 2.3 billion that they can use to either
Right. They
buy
could
more
set,
Luna or
yeah.
more EST, right?
Yeah, they could sell some Bitcoin and put it into whichever side of that equation needed to be rebalanced.
Right. So in other words, if the market players are not keeping UST right at $1, they had this reserve fund to come in and purchase whatever needed to be done in order to stabilize it right at $1.
Mm-hmm.
And unfortunately, this all fell apart.
Right. So as the UST started to lose its peg last week, um, the price kept falling because the amount of Luna in circulation um, absolutely ballooned, and the UST in circulation uh, got destroyed. So if you look at the graph on the right, you can see that on top you have UST quantity in circulation, and on the bottom is Luna in circulation. I believe I saw that Luna's circulation went from 343 million to 32 billion between May 8th and May 12th.
Yeah, I didn't think I'd read that right when I read it. It was such a shocking number. And there's also another element, which is I believe that only $100 million worth of Luna could be destroyed in any 24-hour period. So as people started, I'm sorry, only $100 million of UST could be destroyed in any 24-hour period.
Yeah,
So
that's right. They couldn't keep up.
right, they couldn't keep up, and it went into essentially a death spiral.
Mm-hmm.
So, and then of course, unfortunately, because of this incident, 80,000 Bitcoin were sold. I'm assuming at market rate, by the Luna Guard Foundation, which dropped the price of Bitcoin very significantly. This is a pretty epic sales event. 80,000 Bitcoin is a lot of Bitcoin, and who knows how many other margin calls, et cetera, or liquidations were triggered by that sudden movement down from
Yeah,
34,000.
and then on top of that, there are some other, factors that I don't think anybody has all of the information on right now. In terms of, some people are saying that there were some coordinated attacks, so to speak,
Mm,
of
mm.
folks trying to basically drive the price of Bitcoin down by doing this, so that they had short positions in Bitcoin, or that there were deals being made between market makers and Terra in order to try to stabilize this. And so those were kind of backroom deals, all of that stuff that I'm sure it may or may not come out at some point. But there was a lot of moving parts that that caused a lot of people to lose a lot of money.
Exactly. And then I also think that if you're, going back to the three different types of stable coins, because there are some real use cases, I think, for some of the, particularly the fiat backed stable coins. Like I really don't think that they are, I really don't think that they are a terrible idea. I mean, there are 15 to 20,000 cryptocurrencies. 99.9% of them are complete garbage. I hate to burst everyone's bubble, but almost all of them are really terrible and they have no use. But a stable coin that's backed by dollars, essentially by the actual underlying asset, does have a use because you're able to keep your money in what I'm going to call the crypto space rather than going back and forth between legacy financial institutions.
Right.
Now, when
Look,
you go to
it's the same. It's a Chuck E. Cheese token in the same sense. You go to Chuck E. Cheese, you put $20 in the machine, you get 20 tokens. It's still worth $20. It's the same basic idea.
Exactly. And then when you go to the cryptocurrency backed stablecoins, well, now you've introduced a new level of risk because the cryptocurrency that is backing it is going to have a significant amount of volatility regardless of what coin is backing it, which is the reason why you have to have much more in
Excess
reserves than
reserves.
you would
Yeah.
have for a fiat backed coin. Because for a fiat backed stablecoin, if you have 1-to-1 in reserve, you're in great shape. For, let's say, a crypto backed coin, you may need 2x, 3x, or 4x in reserve to allow for the fluctuation in price of the crypto asset. And then when you get into algorithmic stable coins, especially those that pay 20%, I think most people should see like some really significant warning signs because there's an old saying, it's kind of a cliche, but if it's too good, if it sounds too good to be true, it probably is. And 20% interest on your money for what's considered kind of a no risk kind of asset where your asset's not supposed to go up in value. So 20% on a
Right.
savings account, you have to ask a lot of questions. Where's this 20% coming from and how safe is this money?
I
And
mean, even if it's 10 or 15%, you're still talking about, that's compared to, like you said, you're lucky to get a 0.5%, 50 basis points in a savings account at a bank.
right. And then when you think about what the algorithmic stable coins are, is that you have these two assets, which is UST. I'm going to consider that an asset, and the other one's Luna. But neither one of them, well, let me put it this way, either one of them could go to zero in an instant. There's nothing stopping either one of them from going to zero at a moment's notice. And that's essentially what happened here. I mean, I think Luna right now, I don't keep up with the price, but I know it's trading for a fraction of a penny.
It's basically at zero.
Basically at zero. And
Done.
its high was, I think its high was 116 or so. And I think at the
Yep.
beginning of the year, do you know what it was?
I know it was at like around, I want to say it was around 60 when all this started to happen.
Yeah, I thought it may have been 80. I'm not sure, but it's in that same range. So, I think that a lot of people got hurt here. I mean, there was over $1 billion involved here. I don't know the exact number, but I know a lot of people got really hurt. And that does lead us to, I think, a number of lessons from this. One is that Bitcoin is not crypto. Bitcoin is Bitcoin. It's a unique asset. It's not like anything else in the crypto space. I know it gets lumped in there. And I also know this is one of your pet peeves, that Bitcoin is not crypto.
Yes.
Bitcoin is Bitcoin. And crypto is a totally different world. It's there. That's a long discussion of what the difference is between Bitcoin and crypto. But this did impact Bitcoin, and it did impact the entire space, which is why we're discussing it. And I think that in some ways, depending on how you look at it, this is a pretty good testament to Bitcoin, meaning you had an enormous amount of Bitcoin that was sold unexpectedly, somewhat violently, for lack of a better term.
Yeah.
And Bitcoin's still around 30,000 a coin. So it took Bitcoin took a really kind of unique and unexpected beating out of nowhere, where you had market forces that had nothing to do with Bitcoin, and it held up pretty good. I think it's kind of impressive.
I'm totally impressed by it. I think that it was a sign that Bitcoin really is anti-fragile. I mean, it is able to withstand a lot of pressure. There could have been much more blood in the streets with Bitcoin if it wasn't as strong as it is, and I think that's really a testament to the asset itself.
Well, clearly, once it hit, there are certain levels in the 20s, 27, 28, 29, where buyers were coming in. I mean, every transaction has to have a buyer and a seller. And
Sure.
realistically, there were buyers there. And that leads us to, I think, a bit of the next analysis that we did, which was taking a look at all of the FAANG stocks.
Here, I'm going to put that
Pull
up.
that up. So the FAANG stocks are Facebook, Apple, Amazon, Netflix, and Google. I also added into this Microsoft and NVIDIA.
And
NVIDIA
the
is a
NASDAQ.
company. NVIDIA is a company that I looked at that I thought should have been in that category, maybe around 2018, 2019. It failed just a bit for me, but I just was curious how it performed because it had been on my radar before.
Mhm.
And it turns out that when we look at the FAANG stocks and include in that Microsoft and NVIDIA and the NASDAQ, it looks like Bitcoin is the best performing asset of the group year to date.
Mhm.
So if we consider that before this, Bitcoin would have been even higher, I don't know what the math would have been, but maybe we would have seen Bitcoin down 6%, 7% for the year. And when you look at these other companies, Apple, which is, arguably one of the strongest companies in the world. Well, it's definitely one of the strongest companies in the world, arguably the strongest company in the world.
Right.
It was down almost 21% year to date. And the worst performing of that, which was a stock that's been, just really an
Well,
exceptional
Netflix.
performer
Yeah.
the past 10 years,
Mhm.
Netflix down 70, almost 71%. It's quite amazing. So in this group, I was surprised to see Bitcoin perform as well as it did. And then we can also see, what were the best performers over the past year. And surprisingly, NVIDIA was the best performer. And Bitcoin is kind of in the middle of the pack. Although, when we look at the 1 year performance for NASDAQ and the 1 year performance for Bitcoin, Bitcoin has essentially over twice the loss that
Yeah, it's
the NASDAQ has. However, um, you know, I think that this chart and these numbers once again are another testament to Bitcoin's value because there's in the same way that there's nothing stopping like UST and Terra from going to zero, there really isn't a backstop from stopping Bitcoin from going to zero. If you take a company like Netflix, Netflix has assets. They have book value. They can sell off things they have. They're not technically worth zero.
true.
So, given that you're in an extremely challenging environment and given that you're seeing an enormous sell-off in the equities market, I think it's really extraordinary how well Bitcoin has held up, especially if you understand that it doesn't have any book value or any other underlying assets.
Absolutely. There is the market has really, in my opinion, supported the idea that this is a important technology. It's an important platform, um, and like you said, it could have been a lot worse.
Mhm. Now, I know we've received a lot of questions, which is over the past 2 weeks is what's going on in Bitcoin? What happened to Bitcoin? Like people are considering whether it is um, the asset they thought it was, and I'd like to share my explanation of what I think is going on with Bitcoin and why the price is doing what it's doing. So I think that to me, Bitcoin, and by the way, this is not investment advice. We do not give out investment advice. We're not advocating for anything. We just like to have a discussion about these topics. So to me, Bitcoin is a risk off asset, meaning you put your money in Bitcoin because you don't want risk. And that may seem a bit strange to some people, but I put it more in the gold, silver. It's a commodity. I put in the commodities
Mhm.
basket. And so while I view Bitcoin as being more of a safe haven and a risk off asset, it's really clear that the rest of the market and most of the players, especially particularly retail, do not view Bitcoin as a risk off asset, but actually a risk on asset. And for that reason, it tends to be correlated fairly significantly with the NASDAQ, and I also think with the FAANG stocks. And one of us is right. I mean, either Bitcoin is a risk off asset or it's a risk on asset. But to me, I think a lot of people don't really understand Bitcoin. Bitcoin is really, really hard to understand. It takes a long time. It takes hundreds of hours, if not 1,000 hours, to understand. And so for people who don't understand it, at first glance, it looks like a risk-on asset. It just looks like a particularly speculative investment.
Yeah, like a tech stock, or like you said, like the NASDAQ, which is a basket of tech stocks essentially. And it does seem to correlate with that for the time being. And, we've seen a few instances of where it's been less correlated, but even just this past week when it ran back up into the mid 30s, that was really tracking with a good day in the stock market.
Yeah, and I don't know when it's going to come back around. I don't know when it's going to come around that people actually view Bitcoin as a risk-off asset. And it's also possible I'm wrong, that it's not. But if you understand the mechanics of it, you understand what it really is, it's hard to argue it's anything but a risk-off asset. I don't know what your thoughts are on that. Or
No, I agree. I think that there is the idea that it is a store of value, that allows you to keep uh, your value for a long period of time. I think over time that will come to fruition. I think that it's hard to argue that you've got an asset that, once kind of the price discovery of it is over, there's no leakage in it. There's really no way for you to look at Bitcoin as anything other than an ability to take value that you own and stick it somewhere and keep it there forever.
And I think, one of the reasons that gold has had value, I think there are two reasons that gold has had value. One, it's got the highest stock to flow ratio of any commodity on the planet. I think stock to flow ratio is around 70. And the stock to flow ratio, for people who don't know, is you take the amount of supply on hand and you divide it by the new supply that you're able to produce each year. So if you were to take like potatoes, we probably have about a year's worth of potatoes on the planet, and we grow about a year's worth of potatoes every year. So potatoes would have a stock to flow of one. And gold is almost impossible to destroy. And so essentially every bit of gold that's ever been mined is still on the planet. And we produce, or we mine, about 1/70th each year of, compared to the current supply of gold that's there. And the other reason that gold has value is because it takes a lot of effort and energy and work to get it out of the ground. Gold mining is not free. It takes work. And so what you're essentially doing is you're trading in, let's just say for your job, you dig ditches, a really difficult job. And you're working really, really hard, 40 hours a week, you're breaking your back to dig these ditches. Well, your money should also represent something that's very difficult to come by. You're storing all of your energy and all of your work in some kind of money. So historically, money have been things that were extremely difficult to get. Even before gold, they were using very rare things, teeth or whatever kind of things people could get their hands on, gold, glass beads, depends on the place, limestone. So gold is really storing your energy and your work. And the reason it has value is because it's very, very difficult to produce more gold. Now, the opposite is true with fiat money. If you have, let's just say, for argument's sake, $1 billion in fiat dollars, and you want to create another $1 billion in fiat dollars, you pretty much can press a couple buttons on a computer and all of a sudden you've got $2 billion. It doesn't take extra work. If you've got 1,000 pounds of gold and you want to get another 1,000 pounds of gold, it's going to take an enormous amount of work to get that out of the ground. It's going to be very expensive. It actually holds value. And Bitcoin has a similar thing there where the proof of work of Bitcoin, and we should probably get into that in a different episode, but I was just thinking about this earlier today, the similarities there and how every Bitcoin that's mined took an enormous amount of work to be mined. I mean, tens of
Takes energy. Yeah.
hundreds of thousands of computers, an enormous amount of energy. And that's why it is a commodity like that. And that's why it can be a good store of value. So, just a random thought that I was having earlier today, I kind of had a little epiphany as far as, how you work and you put time and effort into something and you want to preserve that energy and that effort into something that can't just be easily counterfeited like fiat currency.
Right.
And so we'll see. And so, when people ask me, what's going on with the price of Bitcoin? Well, my answer is the rest of the world doesn't see what other people see. For the Bitcoiners, the people who have really spent time studying this and have their opinion or their view on what it will be, very, very few people understand that. Now, if you go to like a Bitcoin conference somewhere, most of the people in the room will understand that. I think most of the people in the room would be somewhat like-minded, but the general public does not understand Bitcoin. And so for the people that do understand it, they're just kind of there first. And we see this with investing everywhere. There are people that, I was talking to a friend of mine today, and he was telling me that he went to lunch with a stockbroker friend of his that had been their stockbroker for their family for like 30 years. Like a dad was using him as a stockbroker. And the day that Facebook came out, he said, I want to buy Facebook. And the stockbroker told him, no, I don't think it's a good idea. I don't even know if I can get my hands on it. And he didn't buy it. And so my friend saw something that the stockbroker didn't see. And this is what we get in investing all the time. Some people see things before others. So when people say what's going on with Bitcoin, my simple answer is that people don't really understand it, and they don't really understand that it should be viewed as a risk-off asset, not as a risk-on asset. And
yeah, and one thing related to that, and back to your gold example, is that you do hear comparisons to gold. I think there are some very good comparisons to gold as it relates to Bitcoin in terms of the type of asset and the idea that it does require a lot of energy and effort to mine gold, just in the same way that it requires energy to mine Bitcoin. What I think one of the key differences is, and I think over time this will become more of a factor, is that with gold, if the price of gold starts to go up, the gold mining companies just deploy more miners and they work faster and harder to get more gold out of the ground faster. And so that they can sell it at the higher price. Well, Bitcoin solves that problem, but with its difficulty adjustment and with the fact that no matter what you do, there are only going to be a block closed every 10 minutes. There's only going to be new Bitcoins coming into circulation every 10 minutes. And so even if the price of Bitcoin were to, spike up, you can't make more quickly so that you can sell it on the market right away. And you can do that with gold. So in my opinion, that's one of the key advantages of Bitcoin over gold, aside from some of the clear advantages that Bitcoin has in terms of portability and the self-auditing blockchain and all of that kind of stuff. But I think that over time will really kind of cement it as something that's a better alternative to gold.
Yeah, and all that, I agree with all that, but I think that if I was going to summarize, why is Bitcoin trading at 29,000? Why isn't it trading at 290,000? And my simple answer is people don't really understand it. The world doesn't really understand Bitcoin.
And I would go even a step further and say that a lot of people who know about it only know about it because they hear negative things about it. So there is, there's a lot of FUD in the world around Bitcoin. And so, you'll hear it's too volatile. You hear the climate change argument, all of these things that, if you understand it, you realize that they're not really valid arguments against Bitcoin. And in some cases, especially with the ESG side of things, Bitcoin is actually, I think, potentially one of the few things that can actually solve environmental and energy.
It is, and it's amazing how many discussions you and I have had with people who claim that they understand what Bitcoin is. And then you have a discussion and they're just repeating what somebody else told them. They're repeating what they read on some website or some, news aggregator, whatever it is. And they really are just parroting what's there. They haven't put thought into it. But I think when we look at this week in particular, its resiliency in light of what happened with it being caught up in this UST Luna scandal debacle. And then you look at it also in relation to essentially what I'm going to consider the best stocks on the NASDAQ. I mean, these are the assets you wanted to own for the past 10 to 12 years. Nothing outperformed these stocks, more or less.
Yeah.
I mean, these are essentially almost tech monopolies, and there's dominant players. And you see how it did in relation to those. I mean, I'll tell you this, that if you were to cash out of everything on December 31st, 2021, and you had a crystal ball that would tell you what to do with it, where to put your money, based on this group that's there for middle of May. So 4.5 months later, right? If you had that crystal ball, what you would have chosen is Bitcoin, because it's performed better than any of those other assets since December 31st, 2021.
Or you could say it's lost the least, but yes.
It's lost the least, and that is something.
Investments go up and down.
Yeah. I mean, well, it's not that. I mean, given the current environment, I think it's unrealistic to think that it's going to spike in price, that it's going to go up. Now, I think it should, because I consider it to be a risk off asset, that, this is where you put your money when you want to be more safe. But the reality is that is not the situation right now. So,
right.
All right. Well, let's move on quickly to some of the news for the week.
Yeah, I think the theme on our next few slides that we'll run through quickly really have to do with spending Bitcoin. I think there is another one of these things you hear all the time for those that are not in favor of Bitcoin. Say, oh, well, you can't spend it. Nobody buys groceries with Bitcoin. It's too slow. It's too expensive, whatever it is. But what you're starting to see is a lot of different types of organizations, institutions that are now accepting Bitcoin as payment, or and maybe other cryptocurrencies as well, but Bitcoin included. And so here we Bentley University, which is a small I think business-oriented school in Massachusetts, is now accepting cryptocurrency for their tuition payments. Which
why do you think they're doing that? What's your guess on why they're doing that?
Well, I'm not sure. I don't know a ton about the school. The one thing I do know is that it is a very business-focused educational institution, meaning that if you go there, you're getting some sort of a business degree. And so maybe because of the popularity of Bitcoin and crypto in general, you see people that are interested in that space that maybe have a history of dealing with different cryptocurrencies, wanting to get a degree from Bentley, and maybe the money that they own happens to be in the form of some form of digital money, and they've figured that if they accepted that as payment, they might attract more students.
Yeah, I don't know what their actual reason is, but I could argue that why wouldn't you take it? Let's just kind of focus more on Bitcoin. But if you own a business, why wouldn't you take Bitcoin? You can always convert it to whatever fiat currency you want almost instantly. It's not difficult to get the payment rails set up. There are lots of them out there. And so I think because of this, because there's almost no reason to not do it, we're going to see more and more institutions starting to do this. And I do think that places accepting Bitcoin is tied into Bitcoin's value proposition. You know, I don't think Bentley University takes gold.
Right.
I don't think I could pay my tuition in gold because that would be difficult for them to deal with. I mean, that takes some.
Yeah.
It's a very complicated thing to take gold. You have to make sure it's real. You have to weigh it, get the exact amount. It's difficult.
Yeah, I don't
But
think you can just drop a bag of coins off at the bursar's office and, you know,
no,
go to class.
no. But it's not difficult to send Bitcoin. It's not difficult to receive Bitcoin in that exact amount. If you don't want to hold it in Bitcoin, you can just easily convert to fiat. What we talked about in our last episode is like how each of these things is a step, or what I like to say is like another drop of water in a big bucket, a really big bucket, maybe a 50-gallon drum. And you need a lot of these little drips. But what we're starting to see, and we're going to see some of the other places that are accepting it, is more and more significant institutions just starting to accept it to the point where it doesn't even seem particularly crazy anymore. And I do think that this is great for Bitcoin's adoption, and I do think it's great for Bitcoin's value.
Agree. All right, let's go to the next one. So the world's largest family-owned private bank, which I believe is in Liechtenstein, in Europe, is now offering Bitcoin to their clients.
That's extraordinary. Right. And I know I knew about this article before, and I'm just thinking it over right now. That's really kind of extraordinary. If you think,
And by the way, when you say the world's largest family-owned private bank, I believe they have about 285 billion assets under management.
yes, and I'm guessing that's an institution that moves very, very slowly. That's an institution that doesn't like a lot of change. That's an institution that doesn't just jump on the latest thing. So that's great.
All right, let's keep rolling.
It also means there's demand from their customers, most likely.
For sure. Yeah, people were asking for it, I'm sure. All right, the Weiler Automotive Group, they own 23 dealerships in 3 states in the Midwest, like Kentucky, Ohio, and Indiana, have announced that they are putting the ability to buy cars using cryptocurrency into some of their dealerships.
I believe this is the AutoNation group. I might be wrong, but I believe it's the AutoNation group. And so you're going to see a lot of cars being purchased with Bitcoin. I have a friend who runs a car dealership, and he wanted to be the first a couple of years ago. And his the guy who owned the dealership said no.
Yeah. Well, again, it's just, you know, I think this is a function of customer demand. People probably come in and they're looking at a car and they say, God, I wish I could pay with my Bitcoin instead of having to sell my Bitcoin to buy the car. And enough people say it, and enough salespeople talk to the finance manager about it, and next thing you know, it's set up. You know,
and once again, it's a similar situation. The payment rails are there; they're easy. It's not a difficult thing to accept it. There are almost no transaction fees for the dealership, and there's no financial risk for the dealership.
Right.
Right.
They're
So
paid.
I think you can go to a dealership and stroke a check for a car, like a non-cashier's check for a car. Actually, I know you can. And so there's a risk there that those checks will bounce. I guarantee you there's been a time someone wrote a check for a $100,000 car and the check didn't clear and they drove off the lot with it. It gets repossessed, of course, but there is a financial risk to auto dealerships just taking regular checks. And I know some dealerships let you pay with a credit card. I don't know if they charge you an additional fee or not for the credit card processing fees, but once again, there's no reason for them not to accept it. And when you start talking about the value proposition and what can you do with it, these are all just examples of large institutions realizing that Bitcoin has real value. It's not just magic internet money.
Yeah. Well, one thing that I think would be interesting, and I don't know the answer to the question, I just kind of thought of it, is that, you know, first of all, which cryptocurrencies are they accepting other than Bitcoin? But in addition to that, how are they managing the volatility and the price of these things? So, if somebody comes in and the price of Bitcoin is $30,000 and they buy a $30,000 car for one Bitcoin, there is a chance that by the time they sign the paperwork, it could be 29,000 or 32,000. And so, I think that the question is, are they holding the cryptocurrencies on their balance sheets? Are they immediately converting it to fiat? So they're, minimizing that volatility. I don't know. I think it'd be interesting to see how some of these, merchants that are taking Bitcoin or other crypto for larger purchases are weathering that.
I don't know. I think it probably ranges depending on who's involved with it. I think some would probably want to put on their balance sheet. I think others are going to probably use some of the services that instantly convert it to fiat. They're just using those payment rails.
Mm-hmm.
And I also know that in Portugal, the first house in Portugal was sold for 3 Bitcoin over the past 2 weeks. So you've had people buying a house in Portugal. You've got the largest family-owned private bank, which you said was in Liechtenstein.
Mm-hmm.
They're going to be offering Bitcoin. So you can buy a house and a car, and you can get it from a private bank that doesn't make a lot of changes. And also, I know that the Spanish soccer club, Espanyol, is accepting Bitcoin it's actually Bitcoin and other cryptocurrencies for tickets and merchandise and all kinds of things like that. So it's just another step in this adoption. And I think we're almost getting to the point where maybe this isn't such big news anymore, that the next person is accepting it, because we're seeing this week after week, just more and more places where it is being adopted.
Yeah, it seems like every day there's some sort of announcement, and I agree. At some point, they're not really worthy of announcement. It's just natural, organic adoption.
I still personally like to know every new place where every new significant place where it's being adopted. I think all of it adds to this bigger puzzle.
Yeah, and then this was the last one. This one just came out in the last day or so. That Coincorner has this product called a Bolt Card, which is it's a contact. It uses NFC technology. So just like you would tap a credit card on a POS terminal, this is a similar type of setup where you'll tap the card onto, I believe, a smartphone that's got software on it, and it allows you to pay for items at retail using Lightning as the payment rails.
Yeah, what I thought was really neat about this when I saw it is that this paying this way is extremely non-technical, right? So using a typical Lightning wallet, you're going to scan a QR code, which is extremely simple, but you're still using a device. You're still scanning something. There's a process to it, where this is much like using a traditional credit card, even though you're using the Lightning network.
Mm-hmm. Yeah, it's anyone who's ever used a credit card could, in theory, use this. I think this one, once I looked into it, I wasn't quite as excited about it as when I initially saw this, the headline. But again, this is a step towards adoption. I don't know that, there are merchants that are running out to put a Bolt Card reader in their store. For the sake of Coincorner, I hope that lots of people do. And I think for merchants, there's certainly an appeal to have the ability to accept a cashless payment that doesn't really cost anything. So I think merchants overall will be willing to, they'll be really happy to save that 3% fee. And so I think that it's got, great potential. I think there's still things to work out there in terms of, I don't think you can connect that card to, for example, a Lightning node on Tor where you're able to spend your Lightning sats, anonymously, that kind of thing. I think, some of those things, as far as the actual users that are, more hardcore Bitcoiners, they're going to want to see that type of ability, in terms of overall adoption of Bitcoin. But again, I think it's just really cool that now you've got another alternative in the market. I mean, obviously, what Strike is doing, is another example of this type of thing where you're just using Lightning as the payment rails to be able to pay for anything in any currency anywhere. And it's really pretty extraordinary that you've got this technology that's evolving this fast.
To me, what I thought was interesting about this, part of it was that you're using like what looks like a traditional credit card, and it's the same shape and size as a traditional credit card. It does not have a magnetic stripe on it. It does not use the Visa, MasterCard, or American Express network. But what I thought was interesting about this is that it uses NFC, near field communications, and all your smartphones have NFC built into it. And so I think that if you kind of look out a bit and you say, okay, what's it going to be like to pay using the Lightning Network 5 years from now? I can imagine something where instead of using this QR code and scanning QR codes, you're just going to go to a whatever point of sale terminal. You'll put your phone near it or your watch near it.
Yep.
And it will just pay it, because that's essentially what we're doing here. Or you could do something where you put your phone near it and maybe the total for the transaction pops up on your phone, and then you approve it. Maybe if it even wants to use like Face ID. I mean, some people will come up with security ideas, but I think that the big thing that comes out of this is a transaction on the Lightning Network, not using QR code and not using your Lightning address, which is very confusing for people.
Sure.
Right. So it's just a very easy, quick payment technology. You touch a card to something, you're done. You don't line up a camera. You don't have to do anything else. And this NFC technology, I think, is going to move. It's going to be used on the Lightning Network, whether it's on your phone, whether it's on your watch. I don't know.
Yeah.
I don't think the card is really going to survive, but I like the idea of using NFC.
But the card is just a mechanism. You could have the same thing, like you said, with any NFC enabled device. One thing I was also going to mention that is somewhat of a correction from a prior episode is that when you talk about, these types of payments, you're basically talking about debit card transactions. You're talking about, spending cash that you actually have, not putting a charge on a card that you're going to pay off later. And when we talked about that initially after the Bitcoin conference, as it related to Lightning, I was a little skeptical about that piece of it because of the idea of, are people really going to be willing to give up their credit cards that they don't have to have the money sitting somewhere to make a payment? And, after looking into it, it turns out that 2/3 of all of the card payments are debit card transactions. So you're talking about a large percentage, a large majority of card transactions that are going, over the existing Visa, MasterCard, Amex, Discover networks, that could easily go on to a virtually free network for the merchant.
A lot of change coming for sure. Just a lot of change coming. It doesn't happen overnight, but you can look out in the horizon and see that things are going to look quite a bit different in 5 years and radically different in 10 years.
Absolutely.
My opinion. So, Matt, with that, can you tell people how to find us?
Absolutely. You can come to our website, btcbutlers.com, on Twitter at btcbutlers. Our DMs are open there. You can email us at info@btcbutlers.com. And if you enjoyed this podcast, please subscribe on YouTube, give us a like on your various podcast platforms, whether that's Apple, Spotify, whatever. We're all there, and we would love to hear from you. We'd love to have you reach out to us with any questions. And as always, Bitcoin Butlers is here to help you implement Bitcoin best practices, whether that's buying, coming up with a storage plan, and most importantly, our sovereign inheritance planning process that allows you to put an inheritance plan in place for your heirs to be able to access your Bitcoin and other digital assets and other analog assets after you've passed away. We can help with any of that. We'd love to hear from you. Thanks.
All right, Matt, thank you very much. Until next time.
Have a good one.
You too.